So today I was going to talk about a stock that I bought last week, but with what happened yesterday, there was a lot of growth stocks hitting 52-week lows again, and I thought, you know what, we need to talk about this. While these stocks keep pushing new 52-week lows, I need to keep making videos out here talking about this subject right now. So many growth stocks, and even growth stocks that don't lose money, were hitting 52-week lows yesterday. It was crazy. Now the weird thing is that what you'll see with a few of these stocks is that a few of them did start to bounce as the day went on. We've seen that a few times though, so I'm not going to talk about it too much because I say it bounced and we'll probably go even lower because that's what seems to be happening every single time that we do have a bounce. But there was a bit of buying action, so a lot of them did lift off them 52 close when they did put them in, but still so many were putting in new 52 close as the day went on. And generally, if you're a new investor, you're probably looking at a lot of these stocks right now going, what is going on? Is this what the stock market's like? It has been such a awful place for growth stocks recently. And it used to be small caps, but there's even companies that are, a fair decent size, like 10 billion plus, 50 billion plus companies that are growth stocks that are now doing this. And the reduction in share price has just been absolutely devastation. I've been through 2 stock market crashes, and this feels like a stock market crash. I have never seen devastation like this before, out of nowhere, with just a certain area of the stock market. I've never seen it before. And I think it was about 6 months ago, I was actually talking to someone about this, and I was saying, that at the time the stock market was a little bit bumpy, there's a few stocks going down, 20-30%. And we were saying, it is a bit of a bumpy ride at the moment, but you always have to be prepared that stocks are going to go down, 50+% at some point. So you are prepared for this, and you have to be prepared that it could get even worse from this. Now, when we were talking about that, we never actually thought that would happen within a couple of months' time. What has happened right now with a lot of stocks, to see so many stocks lose over 50% of their valuation, you normally only get that in a stock market crash territory. To see so many of these stocks, there's some phenomenal companies as well. You're not talking about garbage companies. We're not talking about companies here that, if they win this deal, then they might make so much revenue, or this company here, they don't have a product that they're selling right now. None of these companies. Some of these companies are fantastic companies. You're talking market leaders in massive TAMs. There's some fantastic companies here that have lost just half the value, even more than half the value, for no reason, and just so quickly as well. The devastation, I have never seen anything like this before. The only time I've ever seen anything like this is in stock market crashes, and the only time when you've had them stock market crashes, you go, it makes sense, everything's down, this is the problem, why, this is what's caused it. But you're looking at a lot of these stocks right now, and you're just scratching your head. It's been absolute devastation to so many stocks. So an example for that is PayPal. PayPal, that has obviously an app that's used everywhere around the world. They've got Venmo, and once again, you're getting a stock that's just been absolutely devastated. 52 highs, down 40%, and this is a profitable company, and this is a major company as well. And this isn't your small market cap. This is a big company at a 44p ratio as well. Tons of profit growing in here, growing huge. Reputation worldwide, has PayPal, has Venmo, really exciting stuff. And what did you have yesterday? You had yesterday where it went down to $178 or $177.62 and putting it at a 52-week low. Once again, like I said, it did have a bit of a rally up off these lows, but we've seen that a few times before. But this is just an example of a quality company that has just been absolutely demolished in the last few months. Mercado Libre, a stock that I don't own, but I appreciate what this company has, the TAM this company has, with it being e-commerce in Latin America, with it being in finance in Latin America, a good quality company, 53 billion market cap. This isn't a small company once again. You look at this one here, since September, absolute devastation within a 3 or 4 month period, losing 44% of its share price. And you look here, 52 close, just around about the 1,000 mark, same again. Look at the 52 close, 1,000. This is once again a stock that hit 52 close, and this is a decent sized company and a quality company as well. Fiverr, I don't own this stock either, but I appreciate how good this is. It's the market leader in freelance work, and this is once again, it's a TAM that's going to be growing so much over the next few years. And you look at this company here, $95. Yesterday it actually went down to $92, and once again the 52 close was just about 91, so that's where it actually got to at one point. Yeah, you see the low there of yesterday, 91.83, 52 close, 91.83. Once again, 52 close, and it's a fantastic company. And don't get me wrong, there's a few companies you look on this list that have had a massive boom since the CV times, and this was a $380 stock, and you do look at some of these stocks and you go, that valuation was stretched. But was that valuation stretched enough to go from $318 to $91? The reduction in share price, the actual absolute devastation to lose 70% of your share price in this company, is absolutely crazy. You think about now, if this was to go to 90, if you bought at $323, you think about what this share price has to do to get back up to 300 and the 52 highs was $336. You think about the amount of share price appreciation it has to do to get up there. It's crazy. And I don't own this company, but I appreciate how good of a company this is. And when I look at these sort of share prices, it's crazy. A company that I own, DraftKings, on Friday this company actually it had a pretty good rally. Now this one isn't actually at 52 close. You'll see here that the 52 close was $23. But yesterday it did actually put a low in of $24, so it is only $1 off 52 close. And this company had a really good Friday. If it wasn't for the really good Friday, we might not have seen it do that. We've probably seen it do 52 close. But once again, this is a company that's this company has done a fantastic year last year, and even 2020 was a great year. And once again, you look at the share price point of view, you're nearly back at like 8th of May 2020 prices. A massive reduction. And this is a company that once again, you talk about companies that are doing really good things. DraftKings have just launched into New York. Now New York has been so successful. So it was the first weekend of sports betting in New York. New York sports betting generated 5.8 million geolocation pings in the first 12 hours after the launch Saturday. That was more than double the 2.3 million pings from the second place state, Pennsylvania. So basically New York, that has just come online last weekend, was the most successful launch ever. So you have something there that has just added into the company. The most successful launch of sports betting in New York. And when you think of DraftKings, obviously they're probably going to say that New York was their best launch ever as well. You think about that, and then you translate that into the share price and go, they've just had their best launch ever, and the share price is down. That is where we are talking the devastation that we're in right now. And one of my favourite companies, I've not actually bought this one at all yet, and I'm generally looking at this one. I think the average is like $17. And I'm looking at this one and I'm thinking, I'm going to have to start buying this. I'm going to have to average up. Even though I'm averaging up a huge amount, I know a share price. I know a company at a ridiculous share price, and this is it. InMode. Absolute amazing company. If you guys know InMode, if you don't know it, have a look. But it's an amazing company. The revenue growth is fantastic. The margins of profit, the balance sheet's amazing. The profit they put in is unbelievable, and the expansion they'll have going forward is crazy. And don't get me wrong, this isn't at 52 close, but what the devastation to the share price on this one as well. We had a 52 highs here of $99. From $99, it's gone down 44% in the share price, and now it's down at $54. Once again, you're getting a share price that's nearly halved. And this company is trading down at a 31p ratio. A 31p ratio for a company that has 20% plus revenue growth, that has amazing profit growth. It's a massive, massive fall off here. And these are just so many opportunities out there. Something like a T-Doc. T-Doc just put in 52 close again. You'll see here that it did, the low yesterday was $76 and the 52 close, $76. New 52 close. Once again, one that went on a bit of a rally, but we're seeing what has happened previously when it's done this. And this is the one. This is out of all the stocks that have been devastated, this is the one that I look at and go, this sums it up. If you look here, 52 highs of $308, and it's down at 76. 76. You think about if someone bought $308, they're feeling a lot of pain, but imagine to go from $76 back up to $300. Think about the share appreciation that has to go on. It's crazy. And you do look at this one, and once again you go, the valuation it was at was a little bit stretched, but to go at $76, come on, this is an absolute drop off in the share price. The share price for Teladoc hasn't been $76 since December, the 6th of December 2019. Pre-CV. This is the reduction in share price here. And you look at something like a Teladoc, benefited massively from the CV situation. New clients coming in, new clients will stick with them. Telehealth has been more and more accepted now. It sped up the transition to telehealth. Telehealth as a TAM, it's going to grow in the next 10 years. You can't tell me in the next 10 years, oh yeah, telehealth is going to slow down. It's going to flatline. It's going to keep going up and up and up and up. And you look at the benefit they've brought in the last 2 years, and if I was to tell you the share price has done nothing, that's absolutely crazy. I mean, if you look at the revenue growth here, if we look at what they were doing the back end of 2019, where the share price was last at this point, 553 million. Now, if you look at what they're about to do, or what they've just done, more than likely closing in Q4 2021, they're probably going to do around 2 billion in revenue. So the revenue has quadrupled in them 2 years, and the share price is exactly the same. And I know a few people will say, oh, but they've done a bit of share dilution and everything like that, but the share dilution doesn't justify how much the drop-off is to the revenue. And you've got to look at what the share dilution was for. Livongo. Livongo is only going to benefit the company in the long term over the next 10, 20, 30 years. So I do understand that people will say, oh, but it's diluted shareholders. Yeah, it has diluted shareholders, but it has nowhere done that to justify the share price reduction. Doesn't justify the share dilution of getting Livongo. And I know a few people will say, oh, it was at crazy valuations, but no way can you justify the valuation drop off to where it is right now. No chance. And I know, once again, a few people will use a bit of a negative to this, that, oh, Teladoc loses money. Well, if that's your point of view, then generally you don't understand growth stocks. Growth stocks are focusing on making sure they take market share, making sure they take that TAM, use that first mover advantage, keep growing, get more and more customers in, and the profit will come in as you scale up. Like a prime example like for Teladoc, the revenue is amazing, the gross margins are really good, and the only reason why they lose money is because they keep reinvesting in the company. You look at the technology and development. If you reduce that by half, if you look at this advertising and marketing and you reduce that by half, it would obviously hit the growth of the company, and it won't grow as fast, but it would be profitable. So, that just comes down to growth stocks. If you don't understand that, then probably growth stocks aren't for you. That is point of the thing here. But Teladoc could easily be a profitable company if you wanted to. It won't grow as fast as what it does. It won't take market share as much as it does, but it could be profitable. And that's one negative that people do use against growth stocks at the moment. Oh, it's just growth stocks that lose money. That's why they're doing so bad. But even right now, you've got companies like InMode, for example, that is massively profitable that are just being hurt by this because it's growth related. It's crazy. I've not seen so much devastation before like this out of nowhere. And I think one example yesterday which kind of showed how bonkers it was is that you've had a company like Zynga who's gone on a fantastic run, and once again they've just had a massive fall off in share price. They've lost half the value. But yesterday Take-Two came in and bought Zynga for 12.7 billion. So that actually, from where the share price was here, that is the premium up to here. So the only way that you would have lost money is if you bought these crazy valuations. And without doubt, back in February, I was saying that, there was so many stocks at crazy valuations up here. But that kind of shows you, these companies aren't just, haven't just come worthless overnight. Someone like Take-Two was willing to come out and pay that much of a premium for a company like Zynga. These companies are generally worth quite, that much. But a company like Zynga, which has also fallen off, that's a prime example of, Take-Two coming in and buying it because that's what it's worth. A lot of these companies, if a company wanted to buy T-Doc, there's no way they're buying T-Doc for down at 13 billion market cap. It's generally not worth that, what it is here. And there's just so many stocks that are being devastated. And right now, if you're a long-term investor, you're probably rubbing your hands right now. There's a lot of companies that, 12 months ago, if you got told that these companies were these sort of prices, you'd have laughed. You'd have gone, I'm not going down to these prices, but they have done. And right now, there's just so many buying opportunities out there. This is generally like a stock market crash for growth stocks right now. to lose so much value so quickly. The devastation is unreal. And if you're a long-term investor, you're probably looking at a few of these opportunities right now and going, these are great long-term opportunities. And compare this to where we were at a year ago and the complete reversal down here. You've only just got to think about in a year's time. I mean, in a year's time, where do you think T-Doc's going to be? And that's me as a long-term investor saying that. I don't normally say these sort of things, but realistically, in a year's time, can you see T-Doc still being $82? Another years of growth? I don't know. I think when you look at these opportunities out here, I think there's some amazing opportunities out here. And if you're a long-term investor right now, you're probably rubbing your hands and thinking, I've got a lot of things to be buying right now. So that's my thoughts on it right now. It's absolute devastation out there, but as a long-term, I think you're getting some amazing companies at crazy valuations right now for sure. So yeah, hope you enjoyed the video. Just wanted to talk about the stock market and the devastation that's going on out there. If you're on the Patreon, I'm going to have one more video coming up, which is an exclusive video, so keep an eye out for that one. It's going to be a really good one. If you do want to join the Patreon, the link is in the description though. If you do want to start investing, some brokers in the description. But I hope you enjoyed it, and I'll see you next video.